It's being called the biggest revision on record. Between April 2024 and March 2025, the U.S. labor market created 911,000 fewer jobs than previously reported. The change is the latest warning sign about a weakening economy, and we are still waiting for the expected impact of President Trump's policies on tariffs, immigration, and spending. So how much worse could it get? Joining us now, U.S. national editor for the Financial Times, Ed Luce, and Brendan Buck, who's still with us. Okay, so 911,000 fewer jobs, nearly a million. It is a big revision, but as was pointed out to me last hour by Justin Wolfers, percentage-wise, it is still not a giant number. Percentage-wise, the unemployment number really isn't changing. That being said, Ed Luce, is this portending a change in our economic status? Jamie Dimon today said this is just another indication that the economy is weakening.
Yes, I think it very clearly portends a growing sort of weakness in the U.S. economy, and the jobs market is a very important indicator of that. I mean, remember, we did also have downward revisions to jobs growth earlier this summer for the jobs numbers that have come since March. So although this trend dates right back into the last year of the Biden administration, and might well explain a bit more of the sort of voter dissatisfaction than some people anticipated in November, this is clearly a long-term sort of slowdown in the U.S. economy, which recent actions are only making worse. The last month of jobs growth was only 29,000. Downward revisions have been up to 100,000 a month. So, you know, if we're going to see something along those lines down the line, then the economy could well actually be having net job losses as we speak. That's not a good sign.
If the Fed does cut rates by a quarter point, some are saying maybe even a half a percentage point might be more reasonable this time around. Is that going to help job creation? Could that sort of move turn this around, Ed?
For sure. I mean, you know, the price of money, the higher the price of money, the sort of lower the investment rate. It's the cheaper you can borrow, the easier you can spend, and the easier you can invest. So that should help to some degree, particularly a half a percentage point cut. If the Fed then really does quite a sharp turn and indicates that there will be more, I mean, I doubt they're going to get down to whatever it is Trump wants. He wants a 1% or 2% prime rate. They're not going to get close to that with these tariff wars on, because inflation is rising. And when you get rising inflation and rising unemployment, you do get something called stagflation. And so the Fed is going to be very, very wary of that. But for sure, interest rate cuts will help stimulate some activity.
All right, let me read a little bit from The Atlantic, and I'll bring in NBC News senior business correspondent Christine Romans for this about the job market. The title of it is "The Job Market is Hell" by Annie Lowrey. The process of getting a job has become a late capitalist nightmare. Online hiring platforms have made it easier to find an opening, but harder to secure one. Applicants send out thousands of AI-crafted resumes, and businesses use AI to sift through them. What Bumble and Hinge did to the dating market, contemporary human resources practices have done to the job market. People are swiping like crazy and getting nothing back. Wow, that does not sound fun, Christine.
No, it doesn't. I just got off the phone with a woman who's 31 years old, a marketing manager, and she's been looking for 6 months. She lost her job in March, kept hearing how great the job market has been and was, thought she'd find something and hasn't been able to. And she describes exactly that situation where a lot of interviews, 36 interviews, but she said she felt like companies were out there posting jobs, but not necessarily pulling the trigger on new hires. And I think we've seen that until now, Katie, when you look at the numbers, like a no hire, no fire kind of situation. Layoffs overall, if you believe the government data, have been pretty low. There haven't been a lot of layoffs, but the hiring has slowed. And these revisions that we've seen, while normal, revisions are always normal, these are much bigger than normal. They would suggest that what was a red hot job market wasn't quite so red hot and might be showing signs of turning now.
It also might explain why people didn't feel so great about things.
I think you're right. You and I talked about the Vibe session for months, and I would look at these numbers that would suggest things were great and people didn't feel it. We talked about, bad messaging from the Biden administration and this and that. But maybe, just maybe, your engine of your own economy is your job. And if you feel comfortable or confident in your job, that can explain a lot.
It's also a lesson to politicians. Listen to what people are saying. Don't tell them what they should feel. All right, Brendan, I want to talk about your old boss, Paul Ryan. He is making some news on the debt. He's going on about the deficit again. He's worried about it. I'm going to read a couple of quotes from him as reported by Puck. I assume it's a bond market episode, an auction failure where basically the Treasury calls up the primary dealers and puts a gun to their head and says to Jamie Dimon, buy the rest of these bonds. The market will know it, yields will spike, and we have a crisis. First off, can you explain to me, Christine, what he's talking about so I know how to...
Well, if that happened, it'd be our worst day at work, frankly.
Well, what is he talking about?
Well, he's talking about if you had this issue where suddenly we are trying to sell our debt on the public market. We borrow all this money and the world comes to us to buy our bonds. If suddenly there weren't buyers, you'd have a situation where you'd have the American banks would have to be in there on the hook for buying these bonds, or the whole thing falls apart. And then markets would know that the banks had come in to rescue the situation, and that would cause a crisis of confidence. It would be all very bad.
Thank you for giving me a basis and understanding that. I appreciate it, because here's what his solution is to it. Paul Ryan, again, as reported by Puck. Perhaps after the midterms in 2027, if the last person talking to Donald Trump in the room can convince him legacy defining, preserving the dollar, stopping a debt crisis, helping the world, maybe a commission could happen. There are Democrats and Republicans in the House and the Senate who are getting serious about this idea. Brendan, he got applause in the room and whispers of people saying maybe he should run again in 2028. Talk to me about Paul Ryan coming full circle, or the world coming full circle to Paul Ryan's concerns about the debt.
Well, I'll point out he never ran for president the first time, and I don't imagine he's going to ever. Paul Ryan never stopped caring about the debt, that's for sure. And he has warned about a debt crisis for many, many years. And I think what the kind of conditions that we're seeing now are the things that he warned about. If we don't ever do anything about it and only make the situation worse and worse, which is what we've been doing, at some point it will catch up to us. And at the same time, he is forever an optimist. And so, yeah, he holds out hope that in the late in the Trump administration, Donald Trump will find religion on this issue, which he's never really cared a lot about because he knows that it's difficult politics. But the reality is we can keep pretending this is not a problem, but at some point it's going to show up in places like the bond market, and it's going to show up in places where we have really high interest rates forever, and even more painful than we went through before. So it's just another warning. People are going to keep ignoring it until you can't ignore it any longer. I don't know that Donald Trump's really the savior, but I have always appreciated Paul's optimism.
Well, let me ask you one other quick question. Republicans who also shared Paul Ryan's concerns about the debt seem to be leaving Congress, running for other offices. Who's going to be left to be banging the drum on this?
Well, as long as populism is front and center, I don't know that that's really going to take hold in the GOP anytime soon. I think what Paul has said, and I agree with, it's going to take some kind of really ugly event to wake people up. Let's hope that we don't have a bond sale failure like he talked about. But something bad is going to happen that is going to make people wake up and say, we just can't keep doing what we're doing. We're a long way from there, but it could happen at any moment.
All right, Brendan Buck, thank you so much. Ed Luce, you too, and Christine Romans. Appreciate it, everyone.